Hello everyone, welcome back to Well Growth Club. Today, let's dive into the story of Aurobindo Pharma Limited, a leading pharma company in India. They make medicines used not just in India, but all around the world. Let's see how their business numbers stack up and what it means for investors. If you see, the company has a market cap of 61,313 crores. That means the market values the entire company at over 60,000 crore rupees. The current share price is 1,046 rupees. Over the past year, the stock has seen highs of 1,593 rupees and lows of 994 rupees. They don't carry too much debt. The debt to equity ratio is 0.25, which is pretty healthy for a business this size. Let's talk sales first. In 2014, sales were just over 8,089 crores. Now, they are up to 32,025 crores. That's nearly 4 times bigger in about 10 years. While the yearly sales growth isn't always the same over the past decade, they have managed a solid 10% average growth per year. Some years are faster than others, but it keeps ticking upwards. If you see the expenses, making medicines isn't cheap. This year, expenses are at 25,518 crores, which is up from 5,951 crores back in 2014. The biggest slice is material cost, about 41% to 45% of expenses. That is the raw stuff needed for drugs. So every price rise or shortage hits hard. Employee costs are steady, around 14 to 16%. So most of their money goes into ingredients and paying their skilled team. Now let's look at operating profit, the money made after expenses but before taxes and other bits. In 2014, operating profit was 2,137 crores, but in the latest period, it's grown to 6,507 crores. But here is something important. The operating profit margin has dipped a bit from 26% to around 20%. So company still makes 20 rupees profit for every 100 rupees in sales, but it is a bit less than before. Besides their main income, company pulls in extra money. This year, other income is 537 crores. That's stuff like investments, interest, and off gains. Every little bit helps the bottom line. Let's look at the net profit, the final chunk after taxes and everything else. Back in 2014, it was 1,169 crores. In March 2021, it peaked at 5,334 crores. Now it is settled at 3,390 crores. The numbers go up and down a bit, but overall it's solid growth. EPS went from 20.12 rupees to 57.89 rupees, making shareholders happy. The dividend yield isn't huge, just 0.43%, but they pay regularly. ROCE and ROE are steady, 14.2% and 11.1%. The stock PE is 18.1, right in a fair value zone. So, in short term, sales and profits have cooled down a bit compared to their fast growth years, and cost, especially for materials, are rising. So, profit margins are a bit thinner. But in the long term, pharma demand will always be there. So, this company remains a stable pick. If they keep inventing new medicines and finding ways to control cost, growth could speed back up. So that is the latest on Aurobindo Pharma, a company that keeps growing, keeps making medicine, and stays mostly healthy in its numbers. If you want more simple breakdowns like this, subscribe, drop a like, and comment on which company I should explore next. See you next time at Wealth Growth Club.